Apple's latest results and prospects as Q4 goes on. Any threat to NVIDIA's decreed GPU market is a threat to its entire business. This is where Apple comes in. As it stands, most would agree that integrated graphics have long stood alone as the most significant antagonist to NVIDIA's decreed GPU. So far, this company has done a remarkable job making sure the performance gap between integrated and discrete graphics consistently remains large enough to justify the upsell for graphics and gaming enthusiasts, especially against the widening backdrop of continued declines in the PC unit sales. However, if Apple has any say in the matter, that may be all about to change. You see, Apple has made a series of interesting moves in the graphics arena lately. First, a few weeks ago, Apple announced that the entry-level version of its new 21.5-inch iMac will feature integrated Iris Pro 5200. To be sure, that's the solid win for Intel, especially considering NVIDIA scored all of the coveted spots in Apple's iMac lineup last year. What's more, this also marks the first time one of Apple's iMacs won't have its own discrete graphics chip. For those of you keeping track, we should also remember that Apple notably underwent the same transition to integrated graphics with its entire Mac Mini line last year, even though the move resulted in a slight performance regression when comparing to the latest higher-end Mac Mini models to those available in 2011, the latter of which were a part of discrete graphics chip designed by AMD. The markets are starting to lose its taste for Apple. A chillingly quiet clap received after its recent earnings release can be compared to the round of applause Google retained after its earnings announcement. Even more chilling is Amazon continuing to move higher despite the fact that it is insanely overvalued. Let's take a broad look at all the profitability, share price, and fundamentals of each of the companies to see if the market is pricing that these companies irrationally or based upon the old adage, buy the rumor, sell the news, have Amazon and Google taken the helm. Did the popularity switch longer ago? Most recent earnings release, we see shares of these three companies reacted differently. Apple dropped 3.6%, although there was a 26% rally from the prior quarter's report. The revenue was up 4% year over year. Apple beat on both the top and bottom line as the economy reported sales of $37.5 billion versus analyst estimates of $36.8 billion. In summary, Apple was extremely close to Amazon's percent revenue beat over analyst expectations, and both were above Google's. Apple also beat both on EPS over estimates by a nice margin. The market may be viewing Apple's growth as running out of steam at our turn branding of the company and the value of the stock. This undervalue of the pricing may be wrong, but Apple fits the value stock criteria before jumping to any conclusions.